Good morning, everybody. How we doing? Happy Wednesday. Happy Hump Day. Yeah, it's Hump Day. Welcome to the morning show here on Stock Market TV. Spencer, Steve, Pat with you. JC's still on the ground in Disney. He'll be back Friday. He'll be back. So we got a jam-packed show today, though. We have Brian Shannon at 9. We'll have Mary come by at 9:30, and we'll have John Netto come by at 9:45 to talk about the Fed and how to trade it if you want to trade it. It's going to be a pretty it's not about what they do today; it's about what they say, of course, right? So John Netto will stop by about 15 minutes before the end of the show, tell us how he's going to trade it, what words he's looking out for, and yeah, that's the show. So if you're watching us on YouTube, good morning. If you'd be so kind, hit the thumbs up for me, please. That's it. Let's bring Steven and Pat on, and let's roll.
Good morning.
What up?
How we doing?
Hey, guys.
Howdy, howdy. And yes, Wavy, I did say Brian Shannon. So
Brian Shannon.
Yeah, I'm excited. I didn't know until a couple minutes ago that Brian was coming on. What a treat.
So we got Patrick with us again this morning. What a treat.
You're stuck with me. I accidentally woke up an hour early this time, so it's extra early for me this time.
Great. Well, we're glad to have you, Pat.
I might like crash halfway through the show, so just
well, we'll take what we can get. All right, we'll take what we can get. All right, what's going on this morning? It is pretty quiet out there. I always love every Fed meeting day. You can pretty much bank on it. There will be a bunch of headlines because I look at headlines at like 6:37 a.m. and there's a bunch of headlines that are like, market all quiet as market awaits Fed meeting, right? Like as if everyone is doing nothing, sitting there on their hands, waiting for Jerome Powell to speak at 2:30, which of course is not what's happening, right? But
I'll say this though, it is a lot harder to find content for the chart report.
That's what I'm talking about.
For a Fed meeting, because
that's what I'm talking about. It's harder to find stuff to talk about.
People do really like kind of hold their thoughts and kind of just hold off on any bold calls until after they've heard.
Mm-hmm. By the way, Steve, nice lighting. You're looking good.
I was just looking at myself in the video. There's another one. I got to get the other one back in here.
All right.
But one, it's definitely an improvement. I
know
everybody in the chat missed seeing me.
Yeah. But to Pat, that's exactly what I'm referring to. Is like I'm looking at news flow in the pre-market, and it is noticeable, and not just that though. There's less pre-market movement on a Fed day, right? If you look at what's up and what's down, it's like a bunch of random ass stuff, and we have some things to discuss today. We got some charts, of course, but
there's like a certain phenomenon that happens there on the street where a lot of analysts, sell side people hold off,
right?
Hold reports or hold their notes until the Fed gets out.
Yeah.
What time is Mr. John Netto coming on?
9:45. So 6:45 Eastern for him.
All right.
Oh, that's right. He's in Vegas
this morning. What, Pat?
He's in Vegas.
Yeah, we had PPI. What looks like month over month below estimates, right? Year over year, 0.9 versus 1%. Core 2% versus 2.2%. That was year over year. I mean,
what's it all mean? What's it all mean, Spencer?
Well, I had thought that like the Fed had they've already, I know they've met yesterday and today, but like they're not like are they looking at? They're not looking at like this data, right? They're looking at last data, right? Like they're not taking new data into account, like the most recent data during their meeting. Are like I thought they were, because they had already done their.
Why wouldn't they?
Well, but they had done the dot. The dot plot is done already, right? And that's their forecast. and that was.
Oh,
that
you're
was,
saying they're not taking today's PPI data into consideration?
are they?
I would think
shouldn't
so.
they have the best data possible?
It's a 2-day meeting, right? So they're not done meeting.
Right, right.
So I would hope so. I don't know. Who knows?
I guess I don't really know, but I'm at this point. I'm less interested in the PPI and CPI, and more interested in just the Fed funds futures, which seem to be in somewhat of a consensus, whether it's April or May, somewhere on that timeline that we're getting a rate hike. So that's all that interests me.
I got some charts to talk about here. Do we have a chart of the Dow Jones Industrial Average Futures? Because we have some news there. I think
Right.
Pat can speak to.
Oh yeah.
Well, we'll have to talk about this when JC gets back too, because this was news to me. Pat's the one that brought it up yesterday on the Spaces.
Yeah. I mean, so I mean, Steve, you didn't even believe me at first. I didn't believe it when I looked, but the Dow Jones futures are already at an all-time high. So bulls better hope that the futures are telling the future, right?
Run that bumper. Pat's ready to talk about some new highs.
That's right, Josh. Mercury is in retrograde. But hey, do we have a chart of the futures, or
You didn't bring your own chart?
I didn't bring it on.
It's BYOC. So as that chart is getting ready, I'm going to run through. We got a quick little follow-up
Cool.
from yesterday, and then we're going to talk about energy, because we've been mentioning energy a lot on here, and I guess that we want to take a more cautious approach to it. We'll talk about why. First, throw up the Magnificent Seven versus equal weight NASDAQ ratio. I promised some stats on this. I wouldn't overthink something like this. Do we have charts? Should be the first chart in the deck.
Yep, there it is.
2. And then somebody just deleted my chart.
That was not me.
All right. So do you want to overthink this as a one-day rate of change, but it's just another way to visualize? Somebody mentioned on Twitter today, oh my God, I like the heat map, right? Because I think the heat map is such a cool visualization of the tape in any given day, or you could really run a heat map on any time frame, right? This is the same thing. So it's a one-day rate of change up top. Focus on the black line down below. That's the ratio of the Magnificent Seven relative to the equal weight NASDAQ. Now, on Monday, the ratio was down over 3%. It was the worst single day performance from that ratio. So what it means is the biggest performance gap, right, between Magnificent Seven, which was lower, and the rest of the NASDAQ, which was all mostly higher, since October of last year. If you go back and zoom way out on this, really the third or fourth worst day in history. And they all kind of clustered during the last cycle. You can see one around the peak during the last cycle, one around the bottom.
This is Monday, right?
This was Monday. So again, it's just another way of illustrating that was a big deal, right? The bifurcation, even though it was just a single given day. Am I overthinking this, or is this important? Is this something we see during trends, at the end of trends, at turning points in trends? What? Or nothing?
I would agree with you. I think it's kind of like almost like you think of it like a thrust, right?
I didn't say that. You said that. You said
I think it's one day.
Yeah,
Spencer,
I would agree. Like, I wouldn't make too much of it. I wouldn't overweight that one point, but
I wouldn't either. I agree. For
Okay.
now, it's pretty much a nothing burger. I have a feeling we might take this low out on the rate of change and have another day like this in the coming days and weeks, right? Another one. Maybe we get a cluster of spikes on this. Maybe we can switch it to a 5-day rate of change and kind of see that momentum shifting in a big way over longer time frames. It is the kind of stuff that you do see at tops and bottoms, though, not in the meat of trends for the most part, right? Volatility tends to blow out in both directions a lot of times during reversals in a trend. Now, I think the maybe more important point about this chart is notice the blue line that's overlaid. That's just the NASDAQ 100. Do stock market bulls really need to root for this ratio to hold up and keep moving up and to the right? To me, it looks like there's a very strong positive correlation between this ratio, so Mag 7 leadership, and stocks more broadly, right? Look at the NASDAQ 100 moving with this ratio. Do we have to worry from a bull market thesis perspective if this ratio does roll over in a big way, I guess is my question.
Well, we'll know, right? There's no sense in worrying about it before it happens, right?
Last time this ratio was moving down and to the right was 2022 when we were in a bear market for stocks, is my point.
That's
as long as it's not, then then it's okay.
If the Magnificent Seven does not keep outperforming, does it throw a wrench in the bull market thesis?
That's a really, really good point, Steve.
And well, remember we're talking about this yesterday or 2 days ago, right? About the rest of the market picking up the slack, right? All the other stuff. I guess it would depend on them now, wouldn't it?
It also depends on what your measure is for bull market. Looking at the NASDAQ 100.
Yeah, that's true.
Are you looking at the value line or the Russell 2000? Because you could argue it has not been a bull market for the Russell 2000. Hope JC doesn't hear me, right? But it's been a bull market, certainly, for these other large cap indexes. Could we possibly go to a place where now we're saying in 2024, oh, look at these large cap indexes. They're dead in the water, sideways, flat on the year, maybe up marginally. And then the Russell 2000, wow, look at that, new leader. It's still a bull market if that happens, in my opinion. And maybe this ratio is falling in that environment. I'm just saying we have to be open to these different potential outcomes. Because what happens as investors and traders, we get used to the things that are working or the things that are already in place. Energy, anyone?
No, I mean, of course you're right. I'm looking at the chat. Chat's making some good points as well. I'm just thinking about how I'm just thinking as you're talking right there. I'm just thinking about every day how I don't look for it, but I stumbled upon some sort of bearish outlook almost by accident, just by being on the internet, right? And
if you're on the internet too long, that happens, right?
Right, of course. And I'm trying to like conflate what they're saying. I'm trying to make sense of what they're saying with what you're saying. And sure, yes, if the 7 biggest stocks start going down, of course it will take the indexes with it, right? And by most people's definition, that would lead to, at the very least, the end of a bull market, right? By most people's definition. I don't think that's what you guys use as a definition, but I think that's most people's definition.
Do you not like our definition?
I didn't say that. I'm just saying it's probably not the most common definition. It's you know what? There was a good survey on Twitter. Oh shoot, who did it over the weekend? Was it Economic? Asking what is a new all-time high a measure of price or a measure of total return?
Oh God, I saw that.
Oh my gosh,
that's a stupid question, dude.
Oh, 100%. And you know what? It bugs me when I do see like people getting excited about the total return highs. It's like, what? Just wait. Just if it's probably going to hit an all-time high in price if it hits it on a total return basis. So
yeah, no, and to be clear, I'm not like listening to all these perspectives. I'm not sitting here ringing the bell saying go to cash, put it under your mattress. But I like hearing perspectives that don't necessarily jive with ours. I like hearing people, even if I don't agree with them, I like hearing their thoughts. You know, I would rather hear someone's thoughts who disagree with me than someone's thoughts who agree with me, because I know what I think. I don't need you to tell me what I think. I know what I think.
So total return matters. It's just a different bit of information.
Right.
When market participants say a new high or a new record high in something, they're 99% of the time referring to a high in price.
Right. No, of course. And that's what I'm talking. I'm referring to like the common definition, and that of course is price. And the common definition of a bull market is the indexes making new all-time highs with regards to price. That's
Yeah, got it. I don't think it's really that fun of a conversation. Before
I'll
Pat,
take that a step further though, and I'll say that I feel more comfortable calling something a new bull market once it's at an all-time high. Like basically just being up 20% from the lows, to me, I'd rather start calling it a new bull market once we break out to all-time highs.
so
But
Spencer likes to leave parties early, and Patrick apparently likes to come late. All right, that's one way to do it. Listen, we sit here and talk about this huge, daily swing out of the Magnificent Seven and into the rest of the market and what that might mean. Context, right? Let's real quick for context. Give me slide 3. Pat, don't they call this like 3 soldiers or 3 white soldiers or something like that? Isn't this a candlestick formation when you get
I think you got it right, Steve.
3
White
white
soldiers.
Whatever it is, it's not bearish. I could check in my Nissan later. But as that was happening, right, and we're talking about the Magnificent Seven having this terrible day, this is what the NASDAQ 100 looks like, right? So let's not lose sight of that. Patrick's going to come out here and talk about new all-time highs in another index right now. And if you watch the news at all, go to the next chart, they're going to tell you about this weekly win streak all day, every day. So a lot of good stuff going on, despite this leadership that we're talking about. This index is fine, right?
Yeah, I always thought winning streaks and losing streaks were just kind of trivial, like fun facts. But Frank Capillary does a lot of really good work on it, and kind of incorporates it really well into like the behavior of price action and what it means for volatility and stuff like that.
A lot of times streaks, like if you look at like an Uber chart or a ServiceNow chart, it just speaks to like the relentless bid or the lack of sellers, right? So it speaks to the character of the trend. If you can't get a single down candle or a single down week, and have these huge up week and up day streaks, it just speaks to the supply and demand dynamics going on in that market, right?
Right, exactly.
All right, talk about your Dow futures now.
Yeah, so we were talking on Spaces yesterday, and all of a sudden I noticed Dow futures were already at their all-time high. They actually broke out on Monday, and we got follow through yesterday. So you already got the all-time high and follow through.
Okay, so yeah. Nasdaq probably follows pretty soon, right?
Okay.
Nasdaq's next. How long does it take the Russell?
Well, so I'm really surprised that, first of all, Dow was first. Like, I get it. It didn't fall as much as the other ones. Its drawdown was a lot less than any of the others.
Yeah.
But, given all the focus on the Magnificent Seven, I would have thought NASDAQ or S&P would have done it. But even when you look at the components within the Dow that are the year-to-date leaders, it's not necessarily, Apple and Microsoft aren't first. It's Salesforce is first, Intel, and then Apple and Microsoft. So, really, really goes against the whole it's just 7 stocks narrative. At this point, I feel like that narrative's been busted so much that you should be embarrassed if you're still saying that.
Well, yeah, it's a price-weighted index, right? So you don't have that cap-weighted.
That's true, yeah.
Like the others, which is nice. It makes it a little bit different. And I think the only reason why it is the first one there is, like you pointed, it's more resilient. It's lower beta, so the drawdown is far less severe, pretty much always, and then in this index than the others. So now it's the first one back to those highs.
Yeah,
I wouldn't have been surprised if the NASDAQ was the first one there too.
Stock Market Mike says, doesn't the Dow speak to rotation to materials and industrials?
Not really.
Not a ton. I mean, the industrials aspect of it, I think a little bit, right? But
I don't know how much.
But I do think that it's still positive that you're not seeing a tech necessarily index leading. I mean, they still have a ton of tech in them, but I think that's interesting, right?
Yeah, 100%. Let's talk about energy before we move on now. Here. Oh, wait, no. Answer my question. So Russell 2000, guys, 30% to get back to those highs. To get back to the equivalent level that the best large cap indexes are now at, new all-time highs, 30% move. Do we see it in 2024?
I don't think so. I don't think we see a new high in Russell in 2024.
Wow, Pat hates small caps, Spencer. What are we
doing? I love small caps, man. I think they're great for information, but
You just don't.
I don't think they do it.
Okay. All right. So you heard it there. Take that down in your sentiment notebook. Pat hates small caps. No, I mean, it'll be interesting, right? 30% is a big year, but how much was the NASDAQ up this year?
I'll never forget when the Russell peaked. I met John Roque for the first time that day, and I was with Todd and John, and we were just talking about market stuff. I was like, "Hey, did you see that breakout in the Russell 2000? Like, beautiful breakout." He's like, "Yeah, but have you seen the looked within it at the components?" And I was like, "Not in a while." And it was at the time, it was like Avis or
GameStop.
Oh
Yeah,
my god!
Remember
when Avis was the top component?
Yeah, it got really weird for a little bit.
That was weird. Yeah,
At the peak too. So
it doesn't have these massive weightings.
No, I know, but still, one of them has to be the top, and it was Avis.
It's whatever one has the most momentum since the last rebalance.
Right.
Okay, let's look at these energy charts real quick. Talking about energy.
And then we have some news as well after this.
I would love to do some news. So look at these prior cycle highs in not just energy stocks, but also crude oil. 2018 highs. If they go, remember when we were talking about these levels over and over and over again? The financials, 2018 highs, small caps, the 2018 highs, the Ethereum and the Bitcoins, the 2018 highs. Same thing here. Same thing. This is when risk assets peaked during that 2018 bull into bear market. So it's a major level. A lot of pro-cyclical assets are still dealing with this level. A lot of value indexes are still not far away from this level. Small caps, like I said, and financials look similar. If these levels go, got to start talking a little bit differently about energy, right? It moves away from what's been a sideways or range-bound market and starts to look a lot more like a bear market, doesn't it, for below those levels?
Totally.
Zoom in now. Look at gasoline and break-evens. I know we talked about this one. So this is a more tactical view. This shelf of lows looks like probably going. Check break-evens today going into the Fed.
Steve, that's what I was going to ask you is, do you see a scenario where all of a sudden oil or energy prices and yields suddenly diverge? Because it seems like energy has been driving yields, or at least they've been very positively correlated lately. Do you see them potentially going separate ways? I mean, it seems like they're both on support right now.
Not right now, because it's all about this inflationary pivot, right? So the Fed is pretty much going to follow inflation. And I mean, to answer your question any other way, I would have to make the bet that gasoline prices or crude oil aren't going to continue to move with inflation, right?
Okay.
As long as they do, then yeah, these charts will continue to look similar, right?
Right.
So, I mean, today will be big. Probably barely even worth looking at the bond market right now. Probably want to wait until this afternoon or even tomorrow, right? But a little bit lower here today in yields. We'll have to see. Next chart, you're also seeing maybe a big shift in that leadership regime that's been in place off of the 2020 lows for energy, right? So this is energy on a relative basis shown below crude oil here in blue. It's a nice little top that's forming. So we'll see. It could fail, of course.
Potential top.
We see it all the time. But then when you compare it to one of the best indexes, something like technology in the next chart, I mean, you don't really want to see it back below those .com lows shown on the left-hand side of the screen, right? We had this nice reversal. We were excited about this one, right, when it sprung higher and took out those lows from early 2000s. And now we're right back there. So this is energy relative to tech. So I guess for now, no longer the leaders, haven't been for a while. And these tops really need to start failing, or we need to see these assets dig in at these, very logical support levels. If they don't, energy is going to be a big red light for energy assets, right?
Yeah.
So,
I did see a lot yesterday on Twitter about commodities for the first time in a while. I hadn't heard too much talk about commodities, but a lot of those commodity indexes, crude oil is the biggest component of those. So Now that it's under pressure, commodity indexes aren't looking nearly as good as they were like this summer. So
what were people like tweeting out the CRB index?
Well, for a while it was like, commodities doing really well. Over the summer, it almost looked like they were kind of reasserting their leadership again, and here we're kind of back at it.
So the Thomson Reuters, the CRB looks a lot like crude oil. I like our equal weight one. I like our custom index. But again, all this stuff kind of just on the range lows. Copper too, Pat. Copper is another one. I mean, it's just been a mess forever at this point. And gold, I got nothing really to say about gold.
So with copper, I feel like copper hasn't been the type of leading indicator that it once was or has the reputation of.
No,
and I heard someone made a point. They were like, no, copper's been doing its job. It didn't really break down. So therefore, it didn't really, it signaled that maybe we wouldn't go into recession.
Well,
but I think that might be a little bit of a stretch.
It's a bit of a stretch there.
On an absolute basis, fine. I think it's still whatever it always was, but it's really more for us. It's that copper gold ratio that has not worked.
Yeah.
That has not been the signal that we're used to it being. Are we going to do some news before Brian comes on?
Yeah, let's do a couple of things real fast and we'll get Brian on. Let's talk Pfizer here a little bit. They came out with updated guidance this morning, a full year revenue guidance for the 24 fiscal year. They now see revenues in the range of $58.5 to $61.5 billion. Prior estimate was at closer to $63 billion. So lowering their guidance for the full year. And the stock is now testing its COVID lows this morning. It is right there. And the chart pretty much says that. You can see. So
Brian's about to come on, and this is where I learned this. So this is awesome. I hope he can hear us.
He can. I hope he can.
So reactions to earnings or other headlines, I guess this was a guidance update. Right?
Yep.
Oh, reactions to headlines like this tend to occur in the direction of the underlying trend. And this chart, and any chart really for Pfizer, shows that underlying trend very clearly, because across any time frame, it's just lower right now. So is it any surprise that they come out and drop a press release and the reaction is no good?
Dude.
What?
This thing.
It's terrible.
Eight months in a row, it's fallen. And it looks like 10 of the past 11 months. That's insane. And you know what? Charlie Bolello's been making this point about Pfizer. If you had been in a coma and you just woke up and I said, Steve, there was a massive global pandemic, Pfizer created the vaccine, the whole world lived happily ever after, you'd think this thing would be at the moon.
Dude, it's not even just Pfizer. Moderna is worse.
Right. And I think it's just proof that, things don't always have to make sense in the market. It's a great reminder that just because A happens doesn't mean B, even though it should happen, doesn't mean it will happen.
Well, in the context of trend, I think this news and reaction makes a lot of sense.
Yeah, absolutely. Yeah.
And the whole
this move does, yeah.
Does Moderna just move in sympathy with Pfizer, or do these stocks just move together all the time? Why is Moderna also down pre-market, I noticed?
Well, I think
problems.
There's a lot of funkiness here because the government was paying these companies for vaccines, for their COVID vaccines for a long time, and now I think they've stopped, or if they haven't stopped, they're stopping. So I think that might be the reason for this adjustment here this morning, which is why Moderna, and then I haven't looked at J&J yet, so I don't know what they're doing.
Okay.
But that'd be my assumption, just a very basic assumption, is that yes, this is related to the COVID vaccine. That's why they're moving in sympathy. But
so keep the Pfizer chart up. I have a confession to make. We make fun of the Dow Selection Committee a lot. We give them a really hard time, and they removed Pfizer right as it was on its pandemic fueled run, and I think it was like April 2020. If you look at the chart, right, the Dow removes Pfizer from the index at like the worst time. We see this all the time. We're laughing like the Stock went crazy after that, but it's really fallen off a cliff since. So if you're looking back now and judging that selection committee move, it doesn't look so bad. I think they added Amgen for it.
I like it. Giving credit where credit's due.
Yeah. So they ended up being right on this one. What do you know?
Yeah.
What do you think their biggest kind of mistake was in the last few years as far as additions and subtractions from it?
Exxon?
Exxon?
Exxon was the biggest, I think, mistake, right? They added Salesforce, which looked no good at first. It's coming back now.
Yeah, I think it's the best one.
It's amazing Walgreens is still in there.
All right. Should we bring on Mr. Shannon?
Yeah.
All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Shannon, good morning.
Hey, good morning. How are you?
Hey, Brian.
Good to see you, Pat.
How are you?
Good. Hey, Spencer.
I appreciate the both of you getting up early to hang out with us this morning. I know it's early, but no, it's almost the open. You're already up.
Yeah.
West Coast special today. Hi, Brian.
Hey, Steve.
So, how bullish are we feeling? 2 weeks before the end of the year. Talk to me.
Trend's your friend, you know? I mean, how can you feel anything but bullish? Cautiously, though, I mean, we're so extended here, and, we've been extended for the last 2-3 weeks. It just continues to grind higher. Today, we've got the Fed. This could be the possibility that this is the news that it sells off on, decides to take a little bit of a rest, maybe for a week or so, and then resume the upward trend. But I'm not looking to sell anything short by any measure. The trend's your friend.
You tend to see like short-term shifts in the trend after Fed meetings. Would you agree with that?
Yeah, and you know what happens often is you often see 2 to 3 day delay as well. Everyone expects that initial move, so first we get the sell off hard, then it rallies, and then maybe it sells off for the day. So we typically have a couple false moves the day of, and then people think that's it. So let's say we sell off, we rally, we sell off, and then maybe in 2-3 days after we settle down, then we resume the upward trend. So, I mean, it's a crapshoot. It's, now's the time not to be looking to aggressively initiate new positions. Make sure your stops are where you want them to be. If you get a hard reversal, that you don't feel like a fool for, not locking in some of the, recent large gains that you've accumulated, and just play smart as always.
So the trend looks pretty good across just about any time frame right now. So you would think, as a trader, great, then this is easy. But you mentioned the issue with all of these stocks looking so extended right now. We were running a script yesterday tracking the streaks in the amount of consecutive days that some of these securities are overbought in the S&P 500. So the best ones are like going on 4 weeks now. Just been overbought like for a month, over a month. How do you navigate that? Is it a good thing? Is it a bad thing? Does it depend on the time frame? How do you approach a stock like Uber or ServiceNow right now that's been going up every single day for a month and a half?
If I'm not in them, which I'm not in ServiceNow or Uber, then I just basically ignore them. Last week I had my eye on Lyft, but I missed the opportunity.
Nope.
Shit. What happened?
No, that's all right. He's back. This happens sometimes with Brian. We're good.
Got it.
Oh, okay. All right.
Lyft.
I'm on a wired connection. That's weird.
Yeah.
Anyways, if I missed the move, then so be it. I'm definitely not going to chase them. The FOMO isn't part of my vocabulary, or my operating principles, I guess. But there's still everyday low risk opportunities that are setting up, and it's just a matter of combing through enough stocks to find those opportunities. And that's what I like to do. I'm a stock picker. I'm bottoms up. I don't really care for top down at all. I don't care what gold is doing versus the rand, or some of these charts that you guys look at, which are great for putting big money in macro timing. But me, I'm for my time frame, which is swing trader, it's all about bottoms up stock picking and what can I do today? How can I manage risk? Is there an opportunity for me to get involved? And there's still the opportunities are there every day.
What are some groups you like right now that you're watching?
I don't really, so back to what I was just saying about stock picking, I don't really do groups. I do individual stocks. If I happen to see a cluster of stocks, sometimes people will point out, hey, Brian, did you realize those, two of those three stocks are in the same group? And I might not even know, truthfully. And I don't really even care. So it's all about, so yesterday I put on Twitter the ISRG, Intuitive Surgical. And I had actually gotten long the day before, but it was still setting up nicely yesterday at I think 313 or 14 when I put it on. And those are the types of opportunities that I'm looking for is what can I do today in a low risk way and hopefully catch some momentum. And if not, then, I get stopped out and that's that.
It's a nice, little multi-week flag there.
Yeah. So yeah, it just broke out of that little flag pennant, whatever you want to call it. Really, yesterday, 2 days ago, rather.
I like that.
So those are the opportunities. Just snow's a little bit extended, but I got involved in that one as well. You've got, Nvidia is one that I've been, putting on Twitter the last week and a half, and that, gave an entry yesterday, and people were looking at that saying, well, the crazy comments, you see them on Twitter. Someone said, yeah, but the long-term chart of Nvidia looks terrible.
What?
Like, what are you talking about?
What are they looking at this thing upside down? What?
Exactly, Patrick. They not terrible, but looks weak is what the word was. And I had to, remove that person as a follower.
Do you find that you buy a lot of the same patterns?
Yeah, definitely. I mean, without a doubt. What I love to see is a stock that has some kind of trend or is just ready to trend based on, longer term patterns that are just, starting to break out. One that comes to mind, what was it actually? Autodesk is kind of breaking out of a long-term stage one accumulation pattern, but it's gotten a little bit extended getting here. So those types of patterns have been really good lately. Path is one of them. There's about a dozen of them that look kind of identical and have had these massive moves. INVA was a good one. Those types of patterns have been working really well lately, stage one to stage two on the weekly time frame. But most of my stocks are already in a stage two uptrend on the weekly, daily time frame, and they've experienced some kind of pullback price wise, or at least time consolidation. I love to see a little shakeout before a move. So, the obvious pullback crowd looks at it, they get shaken out of it, and then you get the stronger move, hopefully a couple days after that.
So if I understand what you're saying correctly, it's from stage one to stage two. Ultimately, you're buying these bases, you're buying these reversal pattern breakouts. Once already in stage two, you're typically buying some sort of a short-term continuation pattern, something like this flag and ISRG, because the new uptrend is already underway. It's at your back, but you're still looking for some sort of shorter-term consolidation than those bigger bases like an Autodesk as a way to get in. And you like it even more if you get a shakeout or a little whipsaw low right before it acts as like a spring. No?
Well stated. What are you using, an AI summary over there?
No, it's just,
No, no, you said it perfectly. I'm not making fun of you. That you got it exactly right.
Yeah. And we are seeing so much of the stage one to stage two, right? Like we're looking at, oh my God, with this reversal pattern, this reversal. Do you think that those patterns are longer term in nature though? And do you approach them differently, like from a time frame perspective?
No, that's the crazy thing. So I always tell subscribers, listen, I'm a swing trader. I try to hold these things sometimes. And so RPD is one that I am holding. It's a very small amount, but I've held it for about 8 points right now, in a couple weeks. So that one is, I try to, move my time frame out. And the problem is that I get involved in these things early, and I get involved really heavily, and I make some good money on them.
Yeah.
And then I figure, well, it's, now it's on its way. It's on my radar for after the next pullback. So I'm interested in, not experiencing those pullbacks and holding through them. For whatever reason, my psychology is I just kind of feel dumb. Even if I bought the stock at 50, it rans to 60. If I hold it down to 56, I just feel like a fool. So I would rather be out at 57, or even be out, go from 50 to 56, miss it up to 60, and then buy it at 57. So my psychology is I'd rather miss out on some of that opportunity, but not experience the pain of the pullback.
So do you have a profit target in place when you get into the trade, or do you monitor it and use like a trailing stop once it's working? How do you get out exactly?
Yeah, so of course I've got an idea of where it has the potential, I think, to go, but I don't like to use price targets. I think people get fixated on price targets and they kind of forget about risk management and say, well, wait a minute, why are we selling some? I thought the price target was 72. Okay, but it's pulling back and it's broken the lower low on the shorter term time frame. Now's the time to take some profits. But you said 72. It's like that's not the point. So I never want to get people stuck on that, anchored to those price targets. Instead, my price target, so I'll look at it and say, yeah, sure, it has the potential to go here. Otherwise, if it didn't have a good, risk reward perceived by me, why would I get involved in it? But my price target for longs is always the same. It's higher. Listen to the messages of the market, raise my stop up underneath the higher lows for the time frame I'm involved in, because if I'm involved in a emergence of a short-term trend and I'm saying this is a trend, well, why would I want to get out? I would want to get out because the trend no longer exists. So if I raise my stop under those successive higher lows and it breaks a higher low at 57 or 67 when the stock, the target was 72, well, the definition of trend no longer exists, so I've got no business being there anymore.
Yep, you make a good point. You have to remain flexible, and for that reason, it's hard to have a price target going in because things change on the way to the price target.
Always. And one of my favorite quotes, you guys know I love these quotes. I think it was Linda Bradford Rashke who says, what the market will do is, easy, but how it does it is something like that. I'll dig it up, but Patrick, maybe you can use that in your chart report.
Yeah, I know what
maybe
you
have.
Talking about. Yeah. And Brian, you have some great quotes yourself too. One of my favorites that came to mind when you were talking was, a stock in an uptrend is innocent until proven guilty.
Right.
In a downtrend, it's guilty until proven innocent. And then others like from failed moves come fast moves in the opposite direction. And, this has been the year for that. We've seen so many failed breakdowns.
Right.
So many of those scoop and scores, as Steve likes to call them.
No, I like that. That's good. Scoop and score.
Brian, is your next book going to be a quote book? I think it could be.
I don't think there's another book.
Never say never.
We got Jay Muna in the chat reading Brian's new book at the moment. Got through half of it last night. Damn.
Wow. It's not a novel. That's pretty impressive.
Are you doing any shorting, and how do you navigate that in a bullish environment like the one we're in now?
I prefer not to short. It's just so much more difficult. I've had a couple that I think, what was it? IGT recently was one that worked out a little bit, but they're just not, so IGT is kind of like looking like it's ready to roll over, but it won't. There have been a couple, but they've been really small size because, the primary trend is higher. When the market seems extended, I don't really, when I look for stocks, I don't look for longs and I don't look for shorts. I look for opportunity. When I'm, going through a large universe of stocks, I just simply write them down, and then I'll, the symbols down. Then I'll look at it and I'll say, I like these stocks, and someone will say, hey, those are, 3 of those are SaaS stocks. I'm like, who cares? That's great, wonderful. But so I'm not looking for longs and I'm not looking for shorts. I will observe that, the gold stocks are still pulling back. They were at potential support the other day, but they broke through that support, what was supposed to be support on the GDX. So I see some of those pulling back, and, don't buy the dip, buy strength after the dip. It can save a lot of money for people in that way. So it's just about looking for opportunity, not for looking for gold stocks. We're not looking for bank stocks.
Right. How about when you're looking through your list of stocks, right? I know you don't do much macro. It's all bottoms up. When you're looking at that many stock charts, you tend to glean insights into the broader market, whether it's like you said, these are all SaaS stocks or just a lot of reversal patterns or more or less new highs. So are you noticing anything kind of stand out as you're looking beneath the surface?
Well, so I've always thought that that gives me an advantage over the top-down people because,
Yeah.
you know, the strongest component moves well before the sector does, and the sector will move before the index. So rather than saying, hey, you know, bank stocks are strong, I've got to go look at all the components on my large list, I might have 15 banks sprinkled in. And when those banks start to perk up one at a time, I'll say, hey, you know, that's two banks today. I haven't seen banks in a while. And then I'll look at maybe the XLF and say, hey, yeah, I could see the case where maybe in a few days something could happen here. Let me keep an eye on, you know, Bank of America and JP Morgan, and because they seem to be leading here. But right now, Steve, specifically, there's not as we started out. It's kind of, you know, everything's a little bit too far stretched. I think though that, you know, the gold has the potential. I'm just looking, gold's up $5 this morning. Gold has the potential to maybe in the next couple days, you know, bottom a little bit in here. What was there were a couple of them that I looked at. I didn't like FSM is a silver miner. And there were a couple other ones that I forgot. Maybe I'll put out a tweet about it later.
But Brian, you're not looking at every stock or every chart in a vacuum, right? Like you do have a broader understanding of, you know, because the more charts you look at, maybe you internalize that information, saying, "Oh, there seems to be a lot of uptrends right now."
Right.
Right.
Yeah, and I mean, look at all the analysis of the ETFs that I do on Twitter
Yeah.
and that. I mean, and I trade those as well. Otherwise, I wouldn't really probably bother looking at them. But I think that a lot of times my opinion of the market overall, it doesn't really cost me money, but it makes me a little bit more conservative at times. Or it gives me the confidence to go a little bit heavier in things, kind of like, you know, right now is everything's on fire. It's just all going. So,
And
you know,
that probably
people are,
happens at the worst times too, right? You probably get scared, you know, at the bottoms and then a little too aggressive at the tops.
well, yeah, so I'm terrible at picking the turning point, but I'm, you know, but it doesn't matter to me because I'm not trying to pick, you know, the turning point. I'm waiting for confirmation that the buyers have regained control. In Nvidia, in my mind, that happened yesterday from the high, what, you know, a month or so ago. So I don't care about missing a 10-point rally on a day trade, only to see it drop 15 points in the next 3 days. I'm interested in when those trends get aligned, and then where's the lowest risk opportunity? How do I perceive that in terms of what the profit potential is and where my stop goes if I'm wrong? Just basic stuff. It's really pretty
Spoken like a
simple.
true trader.
Almost like some, yeah, almost
And by
like
the
a,
way, that quote from Linda Raschke
oh, good.
is markets will do the most obvious
Oh,
thing
in the
in the
least obvious way.
way.
Yeah,
Yeah.
now I remember.
Brian, in the spirit of today, Brian, why don't you give us all, you know, share some wisdom, give us some advice on how you approach, you know, big events and trading around them, something like the FOMC minutes and speech that we have coming up today.
Well, so with open positions that are swing trades, what I intend to do is to have, so for instance, on ISRG, I'm involved in that one from 311. I took a third off with a gain of $4. Now I've got to stop at 317.95 and 314. I will keep the stop at 314 most likely, but if this stock continues to rally a little bit here today, I'm most likely going to raise that stop on that on 1/3 up to maybe 321.85 or whatever. If we get a little shakeout low kind of in the next hour and a half, then I'll put my stop underneath that low so that if we get a strong reversal in ISRG, it's a swing trade. So I don't, you know, I want to lock in this nice gain up in here of, you know, of $10 per share on a third of it, and give myself some room on that final third. But if that final third, if it comes all the way down, well, then, and I get stopped out at 314. Well, I'll have a $10 gain on 1/3 and a $3 gain on a third. But if I took a $3 gain on the balance, I kind of feel stupid for leaving $7 on the table. So I want to, you know, just tighten up my risk and know that there's volatility coming. I'm not going to put on any new trades today that I think will be swing trades. I have swing trade setups, but I'll most likely day trade them. And if I have a nice cushion in front of the Fed, then I'll probably hold some, but I'll have my finger on the trigger to get out.
And and that's just standard for Fed Day for you? You don't want to put on any new swings?
Absolutely, every time.
Awesome.
All right. Brian Shannon at Alphatrends on Twitter. The handle is on the screen. It's also below in the description. Would highly encourage you all to check him out. Check out his site. Check out his books, plural. You have huge fans, Brian. So
thank you, guys.
We love you.
Thanks, Brian.
Thanks, Brian.
Likewise.
All right.
Always such a treat.
What?
Always such a treat. I think that's great advice.
Yeah.
A lot of our trader friends would say the same thing. Sean will tell you the same thing. It's Fed Day. You know, we used to hear the same stuff from Kimmy. It's Fed Day.
I like people who can make it sound simple, who can simplify it, and he does that. So,
You know, Steve, let me flip the question on you. What do you do during Fed days? How do you approach Fed days?
I take it easy.
Yeah, me too.
Also, a lot of times too, when I'm trading, I'm using options, and premiums will be a little wacky, right? Just because there's volatility on Fed Day. So for a number of reasons, it's just worth either being smaller or less active or going golfing. Yeah, no, because it's all.
No, but seriously, like I try not to look at things until like the end of the day almost, because it's like you're just going to be whipped around.
So the game that we're playing here is about stacking the odds in our favor, right? And taking educated risk reward bets.
Yes, sir.
By being active ahead of a big event or through a big event, you're not increasing, odds of success. Right? You're increasing the odds of some sort of outlier event or extra special volatility, kind of messing up what you're trying to accomplish, right? So that's all we can do. So to trade through a quiet or sleepy or boring market just is far easier for a trader than trying to trade through all these different events, call them right, get the direction right, get the volatility right. It's you just want to make things as easy as possible for yourself. And that would be the opposite, getting too active ahead of FOMC. And today, apparently, it's just going to be a snooze fest, but we got like dot plot action. So I'm excited to ask John about this dot plot action.
The dots.
Yeah.
Dots.
Yeah. It's going to be the actual statement will have 3 word changes that people like John are going to focus on. And then, of course, the question seems to be, do they throw the Hawks a bone, right? And it seems to be so I don't know. We'll find out more when John comes on in a few minutes. Let's do some other stuff. We got other news to discuss here. I want to talk about Tesla. Have to admit, I'm a little confused by this headline, or maybe it's just a misleading story in general. But the headline is Tesla is recalling nearly every single vehicle it sold from 2012 to now, basically. Due to
Are you sure?
Hold on, I'm not done yet. So that's yes. So they're recalling basically every single vehicle is over 2 million across their lineup, Model Y, S, 3, and X, over a defect in the autopilot system. Now,
how is the stock not down more?
Hold on, because here's why it's not down more. Because Tesla is going to deploy a software update to fix the problems. So it begs the question, what the hell is the purpose of a car recall? And I actually this got me curious, because this is not the first time you've seen. Okay. I get recall notices in the mail, like from Ford, like twice a year, saying we've recalled a part, or you have a recall notice, go to the shop and get your new part for free or whatever.
Mm-hmm.
A recall does not mean you have to send your car back, which but I guess it seems obvious, but the headline certainly implies that if there's a recall of other products, it means send it back or throw it in the trash, right?
So while that's really cool and awesome that they can do that, it's not to suggest that in the future there can't be a real recall that does require you to bring it somewhere. I mean, cars are built out of metaverse parts. There's real parts there that can be recalled and require you to take it in like you would traditionally do. No.
Sure. So I guess like the government term is a recall, but like in reality, all this means is that Tesla is going to do like a software update and it's going to fix the problem. So I don't know how I feel about this. Like I think the whole thing is just kind of a waste of energy and space. But yeah, Josh, I do agree with you, and I think more often than not, I will step up and defend the media a little bit, because I think more often than not they do a good job, and even when it's not good, at least it's not malicious. It's just like kind of stupid.
But stop.
I think this is stupid.
Most media headlines that have anything to do with Elon Musk, especially from some outlets, are incredibly malicious.
So it's a different thing with the headline versus the article, because the headline, of course, is designed to get you to click. So the headlines, there's an art to it, can definitely be misleading and malicious and all that. And I think in this case that the headline is merely just reflecting what the government said. The government said, "Here's a recall," right? That's like according to the National Highway Traffic Safety Administration. It's a recall according to them. But in reality, it doesn't mean anything. It just means there's a software update coming. Whoop-de-freaking do.
It's always important to pay some mind to who wrote this and what is their bias. And frankly, any headline that has anything to do with Elon Musk or any of his companies that are coming from the mainstream media these days are going to be biased, because he frankly is a threat to everything that they do and the way of media as we know it, right? So they don't like him, and it makes sense why they don't like him.
I don't even think it's that. I think it's like they like building people up and then breaking them down. They did it with Elizabeth Holmes. They did it with Sam Bankman-Fried.
I think that's more of a society thing in general.
Yeah, totally. I mean, they do it with celebrities all the time. We like seeing them be heroes, and then we like seeing them be as human as possible. And
I think he's a special situation, Pat, just because of what he's trying to do.
You're probably right. I mean, I didn't even think about that. The whole Twitter thing.
I think the media loves Elon Musk because he equals clicks. So they love him.
It's almost kind of like Trump in that sense. Like
they love him.
It is like Trump. They love him, but they're not going to say anything nice.
So anyway, Tesla recall notice, not a big deal, but the stock I think was trading down on this. And then what else did I have? A couple more things. Speaking of Tesla, Ford announced yesterday that they are halving their production targets for the Lightning F-150 next year. So surprise, surprise, demand for that, not what they thought it would be. Not a new headline. We've seen other headlines like that from other automakers. So and then I had one more thing. Kava. You guys see Kava yesterday? I think we have that chart.
It had a really good day. Why?
Yeah, it had a really good day. They had their IPO lockup.
Wow.
I think more often than not,
it's the best day ever. I mean, it's only been
more
public.
often than not, these are non-events, but I think sometimes people will try to front run them because it's public information, and the implication being that there's going to be a wave of sellers, right? Because the insiders are allowed to sell their stock. Well, yesterday it was in your face, right? Because that's not what happened at all.
Well, okay, yeah, I guess it's a fair point, but IPO lockup periods are a big deal, and oftentimes there are a ton of sellers standing there waiting for that lockup period to expire, and that's why they are talked about the way that they are. What's probably happening here is if these sellers wanted to sell, they're probably going to rush to sell it as soon as they got a chance. And if they don't, it means maybe they're long-term holders. And then that's good for the stock from a lack of supply perspective.
Yeah. And maybe in hindsight, the lockup day can serve as sort of like a turning point day or, a pivot day, but it's not as if it's not always super obvious in the moment, I guess is what I'm saying. So anyway, but that was notable yesterday, as Pat just said, clearly on the chart there, best day ever for the stock.
A lot of these recent IPOs, they look good. I mean, like ARM, that's another one that went public recently, and it just reclaimed its IPO price. And it only went public in September, but It's
mean,
not terrible.
They sort of have the wind at their backs, don't they?
Totally, yeah.
So,
we saw an IPO frenzy, and then we saw just an absolute drought of IPOs in 2022 for obvious reasons. But
right.
It's interesting seeing them work again.
But not in any size. Like they're sprinkling back in, but
yeah, you're right.
You need more.
Totally.
More would be good. And as interest rates normalize and come back down to earth a little bit, you're probably going to see a lot more.
True.
Okay. That's all I have as far as headlines. A couple more small things like XPEV, XPeng, Baba cut their stake by like half. So XPeng is down.
What is XPeng?
Chinese EV maker. They're down 3-4%
that's
this
the
morning.
XPEV one?
Yep.
Cool.
And that's all I got on the news front. Again, somewhat quiet morning.
I'm not seeing really much worth mentioning here. I heard this, and it's just being covered here. I was listening to Ken Langone on the morning news. I think Lilly will be the first trillion-dollar drug company in history, says billionaire investor Ken Langone. Why? Their pipeline. Very bullish of Lilly, as is anyone, and especially someone like him who owns a ton of Lilly stock. So, again, think of what are these people's biases who are saying the things that they're saying. So he's on there pumping Lilly stock, talking about how great it is. If you go look up their cap table, he's very involved.
I'm sure their pipeline is very robust.
Their what plan? Their
pipeline. I'm sure it's very robust.
Listen, they better be the first trillion-dollar healthcare company at this point because they're far ahead of anybody else. If they're not, then that'll be quite the fall from grace.
Wait, how far ahead of Novo are they?
I think Novo's like what, 400 billion?
Yeah, what's he? I don't know. Okay, should we bring Mary on? I have to get my mornings with Mary.
Yes.
Bumper queued up here.
I forgot to get her charts. We'll grab them quick.
Okay, I'll give you time to do that, and we'll get Mary. What up, Mary?
Hey, good morning. Steve's scrambling to make charts real quick.
Yeah,
sorry, Steve.
I'm sorry.
No, it's fine. I don't need the charts. I mean, I can talk. I can just talk them. That's fine.
They're burned into your brain what these charts look like at this point.
More or less. Yeah, more or less.
I have to. Speaking of charts, I have to get Mary's pictures for recess. Okay, so I'll do that while we do this.
A lot of them, a lot of these stocks that we've been out here trading, I have a nice list from Mary, have similar patterns, but I see a new one on your list.
A new one? Which one?
Robinhood.
Oh, yeah. Okay.
What's going on?
This is me being junky. At least I'm not bringing a crypto stock this week, so at least there's that. But Robinhood, if you drop a VWAP from that July high, that's where I got involved, and it's been looking spicy since. So, I know what I'm trading with Robinhood, but nonetheless, I mean, it's very similar to so many other trades we have taken in the last several months where we drop that VWAP from the summer highs and they go. And I've been very profitable off of this strategy. So yeah, Robinhood. And I mean, we all know that when Robinhood decides to move, it can move big. So this is kind of one more of my junky plays.
So the VWAP break off of the summer highs is a tool that we use to get into a lot of these trends off of the October lows.
Mm-hmm.
But with Robinhood, it's a little bit different from a lot of the ones that we've been trading when you zoom out, right? So you're basically trading this range back up to those pivot highs?
Yeah, for now. Yep.
Okay.
I mean, I think, it's been putting in a big base and, it's been sideways for a very, very long time. Since 22? So, if we start taking out those pivot highs, I think it's on to the races.
Did you know that they do crypto things? Vlad and the leadership over there, they want everybody to know that they are involved in crypto.
And Roth IRAs, everyone.
Yeah, they do Roth IRAs too.
Right. Right. Yeah. So I guess I kind of did bring a little bit of a crypto chart. Not quite Mara Riot MSTR play, but so yeah, I guess it is still a little bit in that sphere.
All right, and Lamb Research is one that we do have. I'll grab the chart.
Okay.
Talk to me. What do you like about Lamb? Actually, I
What's
think you
not
sent
to like?
one to me, right?
What's that?
You sent me this one.
I did. Yeah. So I at some point in the last several weeks or months, this popped up from I believe our premium research. I'm not sure which list it would have been on, but I had set an alert on my trading platform and it fired the other day. And so I pulled up the chart. Lo and behold, it's breaking that 730 level that we had identified as, starting to push out to new all-time highs. And I mean, anything that's moving higher looks good in my book. So, and of course, semiconductors, that's a space that I love to trade just because that's such a powerful space.
The momentum is with these stocks right now, as much as any, right, Pat? I mean,
it seems like it's just picking up again. We saw them lead in the first half. They took a break for 3 months, and here we are picking up again. Not just semis, but home builders too. Another first half leader that's coming back.
This Broadcom chart just looks more and more ridiculous every day.
It does.
Just up over this one so much.
I didn't even see it yesterday. Oh wow.
Oh wow. You didn't see it yesterday?
Whew.
Well, and AMD has been making a move too the last several days. I've been participating in that one as well. But, that semiconductor space, it's like Pat said, they went on a tear and had a little bit of a consolidation, pullback, whatever you want to call it. Had a little rest, and now it seems like they're back on.
Do we have the ARM chart?
Ooh, the ARM.
This is a good conversation just to have because ARM IPO'd when? How long ago now?
I think September, and it just
4 months, 5 months.
So a lot of time we complain as technicians that we don't have enough price history, right?
For IPOs, yeah.
Yeah, to do what we normally do and craft a trading plan on level to get in, level to get out of something. Fonz, I just sent you the ARM chart, so toss that up. So Mary, was it this tight little consolidation that began in November that you were watching?
It was a couple of things. It was the nice tight consolidation, but then again, I love that Brian Shannon was on this morning. I love his books. I, talked with him back out in New York last April when we were out there for the symposium. I love the Anchor VWAP, and I use it all the time. So all I did was I put in VWAP on the day that it opened the IPO. I also put one from the day that it hit the high after. And I've been trading against that. And so, yeah, we moved we moved up over the VWAP from the day it IPO'd, and I've been in since. And of course, then we've got that nice little tight consolidation and move out. So, yeah, that's how I've been trading ARM. That one I've been a little bit more cautious about just because there's not a lot of price history to use. But again, it's that space of semiconductors. So I'm watching
There's a knife. There's enough price history here now, right, to distinguish some sort of a short-term base and spring. You see the move off of it, then you see the short-term continuation off the base, right? It's starting to look more and more like a lot of the charts that we talk about. We were just talking about bases and the short-term continuations with Brian. We got both of that here. And then I want to talk to me about Zscaler, because I think Zscaler is a really good illustration of the kind of chart pattern that we've been going back to over and over and over again all year.
Yeah, so this one, I've been in and out a couple of times against that 190 level, just because we had a nice tight consolidation right there around 190, 195. And so, it's just up and to the right, and we've got a huge base that it made over the last year or so. And, it's in an industry where we're seeing a lot of these similar type stocks move.
Yeah, software has been really strong.
Mm-hmm.
And a lot of these smaller software stocks have been picking up too.
That's a sign.
Yeah.
I think you're a net too, Mary. Same thing. It's the same pattern, the same kind of stock, same sort of not quite yet profitable tech name with a beautiful base. And these stocks are just working more and more. And that speaks to risk appetite.
It sure does.
I was looking through the fundamentals of both of these guys the other day. I mean, these are companies that are growing 20, 30, 40%. They're not making any money yet, right? So seeing these kinds of stocks wake up, get off the floor, print or complete these primary trend reversals, which indicate that new uptrends, new bull markets are underway for these names, is just as bullish as anything. Right? These were the stocks that got hit the hardest during the last bear market. That it wasn't uncommon to hear things said like, oh, they'll never see that valuation again. They'll never see those all-time highs again. Some of them are already seeing them.
I see Josh saying XBI. XBI is another one that I have on currently. I think JC tweeted this out a week or two ago when XBI was down at, again, that level that has been key for XBI. It's around about 63, 65. Yeah. Continued to hold that level again and again and again. And so, Josh, I got involved in XBI, and that has been a great winner. Probably going to take that one up. It's been trading in a range to about up until 90. So I'm going to probably look to take hopefully some profit there. But correct me if I'm wrong. XBI is kind of one of the plays where, I mean, if the market's moving, then XBI is kind of a place to be, correct?
Not necessarily.
Okay.
Yeah.
Well, I mean, if I think we are kind of at that stage, and Steve, tell me what you think of this. Like, if this is a new bull market where you do want to see the laggards start to play a little catch up, and you are, but I think that it could continue probably into the first month or two of next year.
So it's the laggard theme, it's the catch up theme, which I'm more than good with right now because everything's just working. But it's also like that super long duration and interest rate theme, right? These guys are heavily influenced by the direction of yields in the bond market. So just rates coming off, like whatever it was, like 1% over the past month and a half has been huge. It's been huge for cryptos. It's been huge for these growth stocks we talked about. It's also been really big for the biotech. So I think they're all in the same kind of basket.
Yeah, and like with biotech, I like to buy the basket just because I feel like trying to pick one or two winners out of biotech is really hard.
Impossible.
And the charts in that industry group, I'll just say it because I went fishing there the other day. Not as good as some of the other growthier stuff, right? That there's more catch up, more basing to be done on a lot of them. It doesn't say that they won't eventually get it done. It's just these are some of the, least mature bases, I guess, or reversals. But they are shaping up, and the leaders are going.
Yeah, so I've been busy trading. I mean, it's a bull market, if you hadn't heard. So it's been fun. And, kudos to you guys, Steve, Patrick, the rest of the analyst team. I mean, with all of the different things that you guys are doing and all the scans you are running, you come up with some great trade ideas that are highlighted in a variety of our services. And, you guys do fantastic work, and I'm making money, so I'm a happy customer.
Well, thanks, Mary.
Thank you.
And guys, so we're actually doing we do this every single week, but and every month as well. We're doing another meeting today with the analyst team. If you want to join that meeting, ask questions of the team, the only way to do that really is to talk to Mary. If you really want to get on the inside, get in the inner circle. So I'll put the number up on the screen. There it is, 323-421-7910. Call her. We do have a couple of spots open in what we call our portfolio accelerator program. And it is like an inner circle type of thing. But we don't really advertise it too much. If you want to get in though, talk to Mary and she can help you out with that. Okay, it's 9:45. I have Netto here. Let's bring Netto on and find out what to think, how to interpret this Fed meeting today. And I don't have a bumper for John, so we're just going to bring him on. Mr. Netto, good morning.
No bumper required. It's the Fed.
What
John, how you doing?
Hey,
good morning, Mary. Steve.
All right.
Patrick, good to see you, sir.
good to see you.
It was a fateful August afternoon. I think we got together last. So
That's right. It was a great conversation.
Yeah.
Mr. Netto, what words should we be focused on today in the statement?
It's probably going to be more about the press conference than the statement itself.
Okay.
I don't expect the Fed, any sense of the Fed makes too big of adjustments in the statement itself, or probably not. You're not looking at the right spot. So I don't expect too much of a reaction. What is interesting is that co-committing to the statement, we're going to see the summer economic projections. So it's always worth reminding people that the Fed meets 8 times a year, plus Humphrey Hawkins' statement, which happens sometimes in February, and then of course Jackson Hole, which goes on in August. So there's kind of 10 events along with various Fed speakers and times when Powell will come out and talk.
Freudian slip.
Wow. Oof. Yeah, it was. I mean, I've been doing this a few years. I'm dating myself quite a bit when slips like that happen. So listen, today is about how much the Fed pushes back against market expectations. We're dealing with about 110 basis points of cuts right now in 2024. Okay, and if you look at where that stacks up to the summer of economic projections, which comes out today, there's just that. Sorry, that 110 basis points of cuts is lower than the lowest Fed dot right now. All right, so there's definitely a difference between what the Fed is saying and what the market is believing. So it's expected Powell will come out and push back against that today. But one, does the market believe him? And two, how much they what he can say and what's interpreted around that. So I think those are things that we're going to see that the Fed kind of thread the needle on where they don't want to ruin any of their institutional credibility. But this is, I suspect we'll probably see a little bit of softness into this Fed meeting. And then once Powell's done talking, we will resume our upward trend.
Okay, so this
Hold on. So the market is fully anticipating that, I think for the first time this cycle, Fed's going to come out and reduce their rate expectations in the dot plot, right? So you're finally going to see that move lower. But by how much? Like, how much lower does the market want to see that dot plot today?
Well, the market surely doesn't expect it to come down 110 basis points. And I think that superficially, Steve, and ostensibly, the market's not even saying that the Fed's going to come out and actually cut rates in the future. I think the best the market can hope for, and they're okay with this, is that the Fed effectively memorialized that the hiking is done, and so that's probably as good as the market's going to get. And I think at the end of the day, the market, and by the end of the day, I mean end of today and tomorrow, the market understands that's as good as it's going to get, because inflation has been persistent. We got yesterday in the CPI, albeit the number was in line. There was a component with a services component that was a little dicey. We had the payroll number last Friday, where unemployment came in much more hawkish than the market wanted, and so that's, I think, the all clear is not going to be signaled by the Fed. I'm sorry, I got this allergy. I'm so sorry, guys. I'm so sorry.
Okay. Breathe. So they're looking for an assurance that the Fed is done, and I think right now, like the current dot plot shows another rate hike, I believe, this year. No.
It does, but that's not going to happen.
That's got to go away.
Yeah,
and maybe even more.
So it'll be 24 now, and 24, like I said. So remember, we have a min and a max. So when you see the rates come out, so right now we're at 5.25 lower bound, 5.5 upper bound, and so that upper bound and lower bound manifests itself in terms of the projections. In that dot plot of what the average of those two is, okay? So that it's a little funky, but that's sort of the way it's being portrayed right now. Even when it was at zero, it wasn't at zero. It was between 0 and 0.25%, okay? And that aside, so I don't think that, Steve, that we're going to I think the market is going to be focused on with Powell today, that he's not. The fact that they're done, and it would take quite a bit now for them to hike anymore. And in terms of, he'll be asked during the press conference, and this is why I said the press conference is so important. He'll be asked in the press conference repeatedly by people, who are going to ask about, well, when do you think cuts will begin? When do you think cuts will begin? And I think that sorry,
you okay there?
I am. It's just Vegas has this horrible allergy ragweed. And it hits me like 1 week every year, and this is that week. Okay.
Well,
and
better
so
now than Christmas week. So
yeah, no.
Right,
exactly.
go take a Zyrtec and get up on the couch and ready for this big Fed presser.
I will. We got a few hours for that, so I got enough time to make some hot tea and stir my allergy mix and my Benadryl, whatever else. You know what I mean? And
No,
go
but
from-
I want to ask John what I was
Yeah.
trying to say earlier and probably butchering was that the summary of economic projections that's done. That's in the books. That is not accounting for like today's PPI, right?
Well, I don't know. Now I don't totally follow that question, Spencer.
Okay.
Every quarter it comes out. Yeah.
Right. And it comes out today.
It comes out today.
Right.
It comes out, March, June, September, December. So that comes
Right.
out
But
today.
it's not like are they like taking into account like the most like this morning's data for that, or no, that's already
Yeah, well, I mean, so they lobbied their predictions yesterday, or they use the last. So every Fed meeting's 2 days before the Fed meeting starts on Monday night because it's Tuesday and Wednesday. They submit there's going to be 19 projections in there, Spence. Okay, and those 19 will cover what future GDP looks like in 24, 25, 26, and long run. What core PC looks like in 24, 25, 26, and long run. What Fed funds median looks like those same years. Okay. And those projections are submitted before they even start their meeting from all 19 Fed participants. And they're anonymous, so no one knows who they are. And in theory, they are only forecasts. And to the degree that forecasts take in past data, that is a factor for a lot of people's forecasts. Well, where are we coming from to know kind of where you're going? Okay. And so those to say that the Fed forecasts are amorphous would be an understatement, or fluid would be an understatement. So there's a lot of factors that each independent anonymous person can reference in there.
Got it. All right, Netto, thanks a lot, and go take some Zyrtec or something.
Exactly. See you guys later. Appreciate it, man.
Thanks, Sean.
Hey, let's talk chart report real fast, Pat. Anything you wanted to highlight in that yesterday?
So one of the big standouts from yesterday's report was basically volatility. That was kind of the big topic yesterday. The VIX hitting a 4-year low. A lot of people were saying it was the lowest since January 2020, and it was actually the lowest since November 2019. So, I mean, totally a post-COVID low. And, you can interpret the VIX a million different ways. Some people will say, okay, there's no fear out there, and interpret this as a bearish thing, right? Kind of that contrarian, there's no more fear in the market. The VIX isn't necessarily a sentiment indicator. I mean, it's a volatility indicator, obviously, but people use it for sentiment. It can tell you when fear is at an extreme, when it's at an extreme high, but it's not so great at telling you extreme greed when it's low. So I don't really like interpreting it from a sentiment point of view, but at its most basic, it's telling you that the S&P 500 or the market, the options market, is pricing in about a 75 basis point move per day in the S&P 500. And there's actually a fun little trick with the VIX that Steve and I learned in the CMT curriculum. But if you take any VIX reading and divide it by 16, you get the expected daily move in the S&P 500, or what the options market is kind of expecting.
There we go.
And, you hear people all the time these days saying the VIX is broken, and I people have been saying that for so long, and it's doing its job. I mean, it's pricing in the expected volatility, and so I wouldn't read into it too much, other than the market's kind of quiet. If anything, I guess I would lean towards a bullish thing. Like if you look at the quote of the day, it's from George Soros: "Short-term volatility is greatest at turning points, and then as that uptrend gets established, volatility declines." So, is this uptrend being established? Yes. And is volatility coming down? Yes. So, I think you could probably look at that as a bullish thing, the uptrends being established, but I try not to read it too much into the VIX. If anyone's ever been on FinTwit, they know that technical analysis on the VIX is a cardinal sin. So,
you know what else?
Not everyone knows that, but
yeah.
You know what else is a bullish thing, guys?
No.
New 52-week lows from credit spreads pretty much across the board, except for the triple Cs.
Yeah, you've been hearing a lot of that this week too. People talking about that.
Confirming, in my opinion, the incredibly bullish price action from risk assets over the past few weeks and months, right? That's exactly what you want to see from the bond market right now.
Totally.
The chart report is the best daily email I check every day.
I appreciate that very, very much, Wavy.
What a
Shout
man.
out to you.
What a guy.
Get the chart report. It's free. There's a QR code above my face, guys. Get it.
And then the only small other theme, I kind of mentioned it earlier, but commodities are starting to get a little bit of attention here, mostly just because of what's going on with crude oil. You know, I mean, a lot of those commodity indexes, crude oil is a major part of it. And
you keep talking about this attention. Is it just like negative attention about the price?
Well, you know, I think I haven't heard people talking about commodities that much as a group in a while. And then you're seeing it get a little bit more conversation. People are talking about it because that, like DBC, I mean, that's kind of approaching 52-week lows. And it really looked like commodities were making a comeback this summer-ish or maybe the fall.
Several times this year.
Yeah. So, you know, and Steve, I haven't looked at stocks versus commodities in a while. Have you?
No. Because we know which class we want to be in, right?
Yeah.
All right. Should we do recess and we'll bring Mary back?
Sure. Yeah.
All right. Why don't we start with Mary?
Sure.
She was kind enough to send us a couple pictures.
So you guys know last week, JC and I were in the city. Spencer was there. We were in New York City for a CMT event. JC presented a bunch of slides. I know we've talked about it here on the show. What I wanted to talk about for recess was JC was so sweet to take me. We were just a block or two away from the stock exchange, and I was just in New York City for the one event. And so I wasn't doing any touristy things, but I said to JC, hey, I think I heard that the stock exchange gets like lit up for Christmas. And so we walked over there and I got to see it all, you know, like the tree. He told me this tree evidently is older than the tree in Rockefeller. Yeah. He's full of all kinds of historical information. It's really
I think
he is a great tour guide.
In a past life, JC was a tour guide. Yeah.
Seriously. Yeah. So I got to see the tree and, you know, the stock exchange pillars were all red and green. And I saw my first New York City rat. So like it was the full experience. I was just, so if I wanted to just show the picture for anyone, if you get to New York City here during the holidays, be sure to check out the stock exchange because it's magical. Like it's not something I knew was all Christmassy. So there's that.
Gorgeous.
I love that FIDI during Christmas time. It's something nice. And, you know, it's kind of nice to visit as a tourist. If you go, you know, after work hours or on the weekend, it's totally quiet. Yeah. Oh my gosh.
Very
it's
quiet
like,
down there.
You'll forget you're in New York City. It's like there's nothing
Weekends in FIDI is something special. Just because it is. It's like empty. And it's the best thing, in my opinion.
Yeah. Or even in the evening, to Pat's point, after, you know, 6 o'clock, right?
Yeah. There was no one around when we were
ghost town down there.
Yeah.
It's quite nice. I don't really have much for recess other than actually there. You know, I saw what I thought was a very amusing tweet from Bill Ackman last night. However you feel about the guy, I always like when I can get like a peek or a window into like how the other half lives. And Bill Ackman tweeted this entire story about himself and Harvard and how he's mad at them because he gifted them shares, $10 million worth of stock in a private company in 2017. And in 2021, that company went public and that 10 million was worth like 80 million. And he was like, this is great, guys. Aren't I amazing? And they're like, well, no, because we actually sold the stock you gave us back to the company a couple years ago. So oops, our bad. And he was like, what? And the company was Coupang Software or CPNG. Very amusing story, I thought, on Twitter. Okay. You want to check it out.
So I read through that thread. So yes, Bill Ackman is apparently fighting with Harvard. And if you're going to do something like that with an endowment like Harvard's, I would imagine there's a contract in place that would cover him. And if they sold it too soon and they weren't allowed to, then they should be legally required to cover those lost gains, right? But But it seems as though maybe he wasn't smart enough to make sure there's a contract in place. Otherwise, he probably wouldn't be complaining about this, 2-3 years later?
Yeah, 2 years later. Yeah.
The reason why it wasn't enforceable, he tells a nice story, but, well, I mean, maybe he didn't dot his
I don't know.
cross his T's.
I just thought it was a fun little window into how the other half lives and into the mechanics of gifting millions of dollars to your college endowment and it's about donations and what does that get you in terms of funding certain things, and it was a fun little story, I thought. So that's all I got.
A lot of talk about all these colleges these days.
I'm not really. I'm like intentionally avoiding all of it, but this story was a result of all that, obviously, and it was, just a fun little peek into behind the scenes, and dynamics between a really rich alumni and a really rich school. So, thought it was fun. Okay, Pat, you have anything?
I got nothing.
Okay,
Got nothing.
Cool.
I probably did, but just totally forgot.
I hear you. I've taken to writing my recesses down so I don't forget them, because I usually forget them. It is Wednesday. We are not doing What the Fick today, but we are doing Hot Corner. So 1 o'clock with Strazza right here on the channel. Stay tuned for that. Thanks to our guests. Thanks to Brian.
Am I
John.
competing with the Fed? Am I competing with the Fed today?
No. Fed is at 2. Actually, really, the Fed's at 2:30.
Okay, great. All
so
right.
not competing with the Fed.
Steve, I'd rather watch you than the conference anyway.
Oh, thanks, Pat.
Seriously.
No, this is going to be a snoozer anyway. All right, that's all we got. Please do me a quick favor. Hit the like button. What are we at on the like front? My counter is not updating in real time. I have to refresh my screen to see what we're actually up to. Let's get up to 100. That'd be cool. 100 likes would be great. It would make me a little happier. We're up to 47. Not gonna cut it there. All right, we're done. Go make some money. Go trade. And if you want to get into our weekly conference calls and our monthly meetings where you can ask questions of the team directly about everything and anything, call Mary once again. I'll put the number on the screen one more time. There it is, 323-421-7910. And we're done. Bye, guys.
See you guys.
Run it.